print could be 67 by December. I want to bring in now UBS Global Wealth Management Head of Global Equity Strategy, Nadia Lovell. And Nadia, it sounds like you're not panicking either with respect to what's happening right now. You see Brent lower as the year goes on anyway.
Yeah, because, it's not really what's being reflected in the price right now is geopolitical risk. And so concerns around the potential disruption of the flow of oil. It's not a supply issue. We know that OPEC Plus just this weekend is looking to bring back 260K by April back to the market. They still have a lot of spare capacity, over 1 million, that still needs to be unwound later this year. And so if we get some clearance on this geopolitical issue and the fears subside around that, and there's no disruption in the Strait of Hormuz, we think that, oil prices will trade back down to $67 by the end of the year.
All right, let's talk about the broader risk assets here. You're still constructive. We're going to bring up just a table here, just sort of explaining just the favorable backdrop that we have.
Yes, and I think that's telling today, just that you're seeing how even equities trade today, the fact that we have these geopolitical concerns. But I think last we looked, the market was up, and it's because of the strong economic backdrop. Without this, focus on geopolitical risk today, if you look at ISM this morning, wow, still above 50 in expansion territory. And so we think that the backdrop still remains positive. We'll see what payrolls brings us on Friday. But so far, initial jobless claims still well behaved. We're seeing consumer stimulus come out from the one big beautiful bill, and then the earnings season has been great this past earnings season.
Neil pointed to wage growth. He wants to see a little bit more wage growth. Are you concerned there?
Not concerned about that at all. We're still seeing pretty healthy wage growth, and we think that will continue. But again, the consumer still has a lot of savings, and also the overall wealth effect we think will help to stimulate consumer spending.
All right, so you did it. You downgraded technology and communication services, I guess about a month ago. So you saved people some cash, right? You saved them. Almost everything's been under pressure, but you're still positive on the niche, the AI electrification theme.
And I think this is the point, Charles, that AI and electrification isn't just about tech sector, the U.S. tech sector, nor the communication services sector. It is beyond that. I mean, look outside of the U.S. This is partly why we're positive on emerging markets. I mean, look at the performance of markets like South Korea, Taiwan. That's all part of the AI play.
Right.
And what that speaks to is the bottlenecks, the supply chain bottlenecks, particularly around memory, around foundry, around semi-cap. And those are the areas within AI that we are continuing to focus on.
I think I read that Hynix and Samsung may make more money next year than NVIDIA. Just a mind-blowing number.
It's mind-blowing, and that supply constraint is probably going to be there through 2027.
All right, so your target, though, still 7,700.
Still 7,700.
All right, that's kind of, you guys sometimes get a little wobble. Well, you guys wobble a little bit every now and then.
We have not changed that. This is why we are not moving, because, again, that macro backdrop, yes, do you need tech to perform in there? I just need tech to stabilize to get me to that 7,700.
All right, so tech stabilizes. You've got some other sectors that rise to the occasion. The first two that I'm a little worried about. Financials are the worst performers this year.
Yes, they are.
And everyone loved them coming into the year. What's going on?
What's going on is also the concerns around private markets, and that's potentially spilling over to the alternative asset management. Seems quite contained for the moment. And then also there's some concerns around insurance companies of feeling some pricing pressure and trying to maintain those margins, and so giving up some growth on that. But if you look at the banks themselves are still in very good conditions. Remember, banks tend to do well in an economy.
But don't they have some exposure to private markets still?
They do, but again, higher quality, right?
Okay.
Higher quality in the private market. So we're not overly concerned about the banking space, and you still have a pickup in capital markets activity that's coming over. And so this is, of course, what's happening in private markets worth watching, but don't think that it completely disrupt the fundamental stories that's still happening in financial.
Healthcare also is, listen, pharmaceuticals look phenomenal, but outside of that, there's other parts
of managed care. Yes,
yeah.
Charles. We got news. Remember last time I was here, we talked about the initial from CMS in terms of Medicare Advantage reimbursement, and that coming in close to flat. But we still could get an upgrade in April where those numbers can be revised. It's not a final.
Right. No, I believe they will be revised higher too.
Yes.
Nadia, thank you very much.